In the US markets, you've often come across the term DTCC. Let's learn what DTCC does in this video. I'm your learning partner Sushila Hariharan, and if you're interested in a career in investment banking operations, trade life cycle, OTC derivatives, and funds, do subscribe to my YouTube channel where we provide content-centric videos, research-focused videos on these topics. If you're working in a process which is aligned to the US equity markets like the NYSE or the NASDAQ, you will come across the term DTCC, which stands for Depository, Trust and Clearing Corporation. Let's learn more what DTCC does. DTCC is the centralized clearing agency of the United States, and literally its role appears in three distinct stages across the life cycle of an equity instrument in the United States. In the very first instance is when a company issues shares to the public during an IPO or even to its promoters. The shares are held in a dematerialized form with the DTCC. So the DTCC is responsible for actually keeping a tab on the quantity of the shares that have been issued by a company to its various investors, including the promoters. So DTCC keeps a record of all the shares or securities issued by a company to its various categories of investors, and these investors are then literally comfortable with the fact that a centralized agency like the DTCC is holding the shares even though they are the owners of the share, quite like a bank account where we own the funds but the bank is holding the funds for us. DTCC does similar thing. They have the ownership? No, they only have the holdingness, possession of the securities. So DTCC is the master recording agency of all securities, equities, bonds, preference shares, equity warrants, convertible bonds, Class A shares, Class B shares, what have you, mutual fund units, etc. It's like a master record keeper of all of this that have been issued by the companies to various investors. The second time when the DTCC's role is very important is at the time of trading. As we know, investors enter into trades. These could be large value trades by institutional investors like hedge funds, mutual funds, pension funds, insurance companies, etc. And these large value trades are entered into perhaps on a centralized trading platform like a stock exchange or in a decentralized manner in the OTC markets. Irrespective of whether there is a exchange traded product or an OTC market, the risk of settlement is much higher in the case of an OTC product because it's directly between two counterparties, especially in the case of OTC derivatives like interest rate swaps, currency swaps, etc. It is very less in the case of stock markets because in the stock markets they have a centralized agency taking care of the counterparty obligation commitments. Over here, DTCC steps in again. For example, what happens if the buyer enters into a contract with the seller to trade into a particular security and the buyer makes the payment but does not receive the security? Similarly, the seller also stands at risk because they could have delivered the security but not yet received the payment. In either of these cases, it results into a significant amount of counterparty risk, which DTCC reduces, or in this case, almost mitigates to zero. Okay, so the DTCC becomes this centralized clearing house into which the buyers of the assets and the sellers of the securities make the payment into. So the buyer pays in the funds and the seller pays in the securities. The DTCC then matches the obligations of both the counterparties to the trade and then makes the payout of funds to the seller and payout of securities to the buyer. This is the second stage where the DTCC's role is very important. This could happen in the case of equities, bonds, money market instruments, etc. And the third stage at which the DTCC's role is very critical is at the time of corporate actions. Every corporate action that is announced by the company has to be also informed to the DTCC. Since DTCC is a record controller, right? It's the controller of all the securities that are issued with the companies to all its investors, etc. The DTCC must also know about all corporate actions, whether it is stock splits, whether it is bonus issues, whether it is rights entitlement, whether it's coupon payments, anything, because the DTCC has to then necessarily give the mandate to change. Thus, DTCC is the clearing corporation of United States, where now even OTC derivatives, which are subject to a large amount of counterparty credit risk, are now settled through DTCC, thanks to the crisis that took place in 2008. So they are now acting also as a CCP, that is a central clearing counterparty. All this results into the ability of the stock exchanges, bond markets to reduce counterparty risk, facilitating a smoother settlement, a smoother way by which funds flow in and out of the system, securities flow in and out of the system, thus ensuring that the funds and the institutional investors and the retail investors are protected from any kind of default risk. Thank you so much for watching in.